It's time for your weekly commodity market update with Country Futures and Darrell Holaday. Clay Patton here on the Rural Radio Network. Darrell, what a week of trade it's been. Of course, if you want to talk livestock, a lot of volatility there. The grain complex, for some reason, China has a thing for U.S. wheat. Glad to see that. But as well, on Friday, the latest numbers out from USDA seem to be pretty neutral and flat of where analysts had expected. Overall, where do you feel at the end of the week? Are you more neutral? Or are you feeling a little bit optimistic about this market?
Oh, I think the grains are really range-bound as a whole, and we did see some strength early in the week, as you said. Most of it export. You got to feel better about the export business. Well, as you said, we see a lot of wheat soft. Now, I should mention that's all been soft winter wheat to China, but that's important because they're price buyers, and price got cheap enough, and they were the best. The good news is they did it. The bad news is what it took to get that business. In other words, you got to be the cheapest guy on the street with the product, or you're not going to get the business. And that's what we finally got to. But they also bought some U.S. beans, and there's some rumor that we had some unknown corn on Friday. Maybe they bought that, but most of that's been going to Mexico. So that is. I think the export side's better, and it was reflected in the WASDE numbers on Friday that did raise the corn exports 25 million bushels and the wheat exports 25 million bushels. We did not see any change at all in the WASDE numbers for soybeans. On the WASDE itself, basically, I think the reason the market faded after the report is that there just was some hope that there might be something that would inspire some bullish, some buying, and it really wasn't there. Of course, we had kind of rallied into the report. That always makes it more difficult. And second of all, the U.S. numbers were neutral to supportive, as we talked about here, but outside the U.S., the numbers weren't positive. And that, the bulls have been pointing to, you got to think that that Brazilian bean crop has been hurt. Well, it hasn't been. USDA is at 161. I mean, they don't see that it's hurt yet. There's still a lot of time, and that's just down from 163. And then they left the corn number alone at 129. That's a big number. And Argentina, and once again, we talk so much about Brazil, we forget that Argentina's had such a very difficult crop the last couple of years. This year's crop's off to a pretty good start. They've had good moisture. They got a long way to go, but they left their number at 55 million tons of corn and 48 beans. So that's why I think the market faded. It just wasn't anything to spur the buying beyond the rally that we'd already had, and that's kind of what we did. And that's really kind of the story on the week. We did, kind of end up mixed on the week with the soybeans lower and the wheat higher, and the corn somewhat mixed. The crude oil dropping below $70 this week did put pressure on the soy oil that got down below that $50 mark again before rallying back and closing higher. Soybean processors are really trying to be aggressive, crushing, trying to buy beans as they have that really good crush margin right here in front of them because they've had that premium in the meal versus the more deferred meals, and Argentina's starting to offer meal on out there. They've got a big presidential change coming on Sunday, and, the new really libertarian, very free market type president, which will be very interesting to see how he develops, but he's talked about dropping the export tax, and I think that probably will happen, and that could make Argentina a little more competitive. Certainly would be when they get into new crop, as they don't have a lot left over. Their last year's crop wasn't very good. Probably the other factor to go into next week would be the fact that something to watch, although that we're talking warmer than normal temperatures, but a significant, right now the GFS and EU model are indicating a significant rain event moving across the southwestern southern plains, but kicking up into the central plains a little bit, but mainly the southern plains and the delta next week, which they always will take that. And actually the GFS model is very heavy in rainfall, and I don't think it'll be that heavy. It's just hard to believe you'd see rainfall like that in December, but it is going to be warmer than normal temperatures, and that very well could happen. But that'll be watched to some extent. It would certainly set a base for a lot of grass that needed it to continue to build that soil base, and also, of course, the wheat as a whole. But it also might have some impact on the cattle conditions in some of those feedlots in West Texas. We'll have to watch that all really close. On the week, December corn up 2 cents, 4.66. December 24 corn down 2 at 5.12. January beans 21 lower at 13.04. November new crop beans 12 lower on the week at 12.70. December Kansas City wheat up 11 cents at 6.56. New crop July 6.70 up 14 cents, and the January crude oil closed at 71.23 down 2.84. It did, like I said, dip down to the $69 level for some recovery on Friday. Of course, the cattle were under pressure, a lot of pressure again this week in the cash, or in the future side. It just pulls and sucks the cash down. It's just like we just have to find a place where the panic selling stops. And finally, I think Friday we got to the point where that discount's just too big. And with these new contract lows on Thursday, that the buying came in, and if nothing else, it was some short covering. Cash-fed cattle were 3 to 4 lower. We had live cattle over $3 lower, but we started Friday being we were $6 lower on the week, so we trimmed those losses. The choice wholesale beef sharply lower also again this week, down into the 80s. So we ought to be getting down to some levels that would spur some buying. The futures on Thursday were kind of building in we would see beef go down to that 276 to 280 level. That would be very somewhat negative to think you got to go that level of to spur any demand at this time. But it's interesting to note on the WASDE that came out Friday, they didn't increase beef production for 2023 at all, so it's not really a supply issue, and they increased slightly the 2024 production, but it's still 4% below the 2023 number. So they're not really seeing any big increases. So it's a demand issue. We've talked a lot about that, and that it is rightfully concerned. We got awful high and ran the consumer away. We've got a lot of issues in the cost structure between the wholesale and the retail market, whether it be the HRI trade or the retail market. So those are all factors that have led to this big break, and we were just simply lower again. We did see a pickup in export sales for beef this week. A new beef sales for next year we're at 18,800, and good pork sales also. So that's really what we're going to need to do, is get down to levels where you see that product move, and that we've certainly started that process. Weights are still a problem for both the cattle and the hogs. Matter of fact, the hogs are really sitting there in that Iowa, Minnesota area up over 4 pounds versus a year ago. The December cattle down 380 on the week at 165.45. Feb cattle 165.72 down 340. January feeders 215.30 up 88. March feeders 216.07 down 115 on the week. December hogs 68.42 down 18, and the February hog contract 68.97 down 113.
And that is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more when you give him a call, 1-800-292-4038. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.